As a newer trader, have you ever entered into a position only for you to get immediately stopped out? If that's the case, chances are you don't understand how to enter a trade the right way. An entry is a crucial part when it comes to trading, and I believe that there are three different entry models that every single trader should know. In today's video, I'll be revealing the most powerful trading entries and show you guys live examples of how to execute trades in real time. So without further ado, let's get right into the video. So right here, you can see that we are in a clear uptrend in price. We're making higher highs, higher lows, higher highs, and we're continuing towards the upside. What we like to see is this previous resistance turn into support, and we like to see buyers step in off this level for this continued push towards the upside, right? So based off this information that we have right here, it's very easy to see a trade play out in hindsight, right? There's two scenarios that can play out in price right here, right? Scenario number one. Has this happened where you end up having a super solid break and retest? You go in, look to buy right here, and all of a sudden, right, we have a weak candle closure, and then we just end up coming towards the downside and we end up getting stopped out, right? This is a very possible scenario that happens quite often, right? And then you have another scenario where price ends up having a super clean retest. You can see we have the buyers that step in off this key area, and then we end up having this continued push towards the high of day and above. So based off the information that we have right here, right, both these charts are the exact same, but you can see one ends up not working out and one ends up working out. And right, what is the difference between these two charts? And that's what I want to talk about today is the three different types of entry models when it comes to trading. Our job is to determine whether this is going to be a good break and retest, whether we'll end up having a weak candle closure and will continue towards the downside, or if the buyers are going to step in off this key area and we're going to end up having this continued push back towards the high of day. So this is exactly what we're going to talk about, the three different types of entry models, what I personally like to use, the pros and cons between the different entry models, and then I'm going to be showing you guys live trading examples of how I execute trades in real time. So let's get into it. So as you can see right here, what we have is three different types of entries. We have number one, a limit order, right? This is the most aggressive entry model. This is an entry model when you want to be a little bit more aggressive on the overall market, when you have a super good higher time frame thesis. Second, what you have is strong price action. So this is a conservative entry model, usually waiting for some sort of buyers to step in off that key level. And then three, what we have is confirmation candle, which is the most conservative, and this is really waiting for the buyers to step in and waiting for that confirmation candle that price is most likely going to gravitate in towards the direction of the trend that you're trading in. So these are the three different types of entry models that we're going to talk about today, and we're going to talk about the pros and cons and exactly which one you should choose in which different scenario. So right here you can see what we have is a limit order, and this is the most aggressive entry model. And the reason why it's the most aggressive entry model is because no matter what break and retest it is, either it can be good, either it can be bad, right? You're going to get into price because you're going to have a limit order at this break and retest key area. So as you can see, this is a clear uptrend once again, higher lows, higher highs, right? What we like to see is essentially this area be used as support for a continuation towards the upside. So the way the limit order works the most aggressive is when price breaks through a key level, what you're going to have is a limit order resting at this key break and retest level. No matter how price comes in towards this key level, right, you're going to have a limit buy order here resting, waiting to get filled into the markets. So basically, you'll have a limit buy order here, you'll have your set stop at your key breaker structure level, and then you have your set target towards the upside. This usually will be a 1 to 2 or it'll be high of day. So in this case, no matter the price action, when price comes down in towards your key area, right, it could just fail and just continue towards the downside, or it could very well just end up bouncing off this key area and we'll have a nice continued push towards the upside. So now let's go on to some examples and see what this looked like. So as you can see right here, what we have is a clear break and retest. As you can see, multiple touches of resistance. Now we're breaking above this key area. What we like to see is your retest off of your high of day and your kind of 5-minute opening range as well for this continued push towards the upside. So no matter the price action around this key area, we're already going to have a limit buy order resting at this 1115 level, and we're going to be looking for price to push towards the upside. And you can see right here, price ended up tapping back in towards your 1115. That's where we enter in as soon as it taps that key area, stop just a break underneath. And in this case, we're looking back for a push back towards high of day, which would have been a 1 to 2. And you can see this ends up working out. Right now, let's go into another example. As you can see right here, nice highs that were put in. We're now breaking towards the upside. What we like to see now is a retest of your 143 for this continued push back towards the upside. So we're going to have a limit order resting here. We're going to have a set stop, and we're going to be looking for this continued push back up towards 145 and above. And you can see in this case, right, price comes back in towards your key level. We already have a limit buy order here resting. We get filled, and you can see in this case, price ends up pushing towards the downside, and we end up getting stopped out. So you can see in this case, right, no matter the price action at this key area, we're going to get in no matter what, just because we have a limit order, which is the most aggressive entry model. So let's talk about the pros and cons when it comes to having a limit order. Pros. First thing is you get in every single time, right? This technically can be a pro and a con, but no matter what, you're not going to miss out on a trading opportunity. You're going to get in. If it comes back to retest, you're going to get in no matter what. Another pro is that you get the best entry. So whenever price breaks out and comes back down to retest, if you already have a limit order setting here, you're going to have the best entry as it comes right back down in towards your previous resistance, now turning into support. Another pro, you can get filled on the bid. So whenever you have limit orders, what happens? Price comes down towards your key level and you can get filled on the bid instead of getting filled on the ask. And the last pro that I have is the highest risk to reward ratio. If we're getting filled on the bid and we're getting filled at the best entry possible, what we're going to have is the highest risk to reward ratio back towards high of day. So this seems great and all, but let's take a look at some of the cons, right? If we're getting in every single time, no matter if it's a good or bad break and retest, what usually happens? We have a lower win rate. In this case, what we have is the lowest win rate possible. We have around a 30 to 40% win rate when it comes to this aggressive entry model. No matter what break and retest it is, you're going to get filled every single time because you already have a limit order resting at that key level. Another con, you're prone to fake outs. If it works out, it's super great, but you'll see a lot of the times price will come back to retest. If you don't wait for price action around the key level, it could very well just knife through and we end up just continuing towards the downside and you end up getting stopped out. And this usually causes unnecessary losses that you don't have to take. There's times when you should be aggressive and times when you should pull back. And a lot of the times, if you can't identify this and you look for every single break and retest possible, what happens is you do take a lot of unnecessary losses that are avoidable. So let's go on to the second entry model. The second entry model in this case is what's called conservative, and it's waiting for strong price action. So we basically have the same example that we had before. We have a clear uptrend in price, but now what we're doing is waiting for strong price action. So you can see this previous resistance now turning into support. And what we want to wait for in strong price action is any sort of buyers that step in. As you can see right here, what we form is a nice hammer stick candle right off of our previous resistance turning into support, right? These two candles right here are showing lower wicks, right? When you have these lower wicks and price is closing back above this key area, this is a sign that buyers are stepping in. So whenever you see this strong price action and you see that the buyers are stepping in around the key level, this is your conservative entry. And when you enter in, is you can enter in either a market order on these candle closes, or as these candles are forming, right? You see the buyers are stepping in, right? You're going to place a buy order. This can be a limit order or a market order. And now in this case, right, what you can do is risk off this swing low, right? You can risk off this swing low instead of your original limit order risking off this market structure. You can just risk off this swing pivot low, and now your targets would be back towards high of day and a 1 to 2 towards the upside. So this is the conservative entry model, and what we're doing is waiting for buyers to step in. Now let's take a look at some examples. So as you can see right here, what we have is a nice break and retest. This is your 5-minute opening range. You can see that price is pushing towards the upside. upside. And now you can see as price comes down, right, you can see it's a pretty big candle, but what we're going to do is wait for a strong price action. You can see this is a very nice bullish candle right off our 5-minute opening range. We can look to enter in as this candle closes, stop just to break underneath this candle. And then in this case, right, high of day, it doesn't really fit our risk reward parameters. So we're going to be looking for a 1 to 2 towards the upside. And now let's play out the tape. And you can see in the next slide, right, price, we enter in here, stop just a break below. And now we're looking for a 1 to 2. As you can see, we end up getting hit back towards the upside. Now let's go on to another example. Another example, what we have here is a nice break and retest. What we'll be looking for is the retest off of your 136 for this continued push back towards the upside. So as we play out the tape, you can see that price comes all the way back down towards our retest level. You can see that the buyers are stepping in right off our 136. You can see nice subsequent candles as well that are pushing back towards the upside, showing that buyers are stepping in. So what we can be looking for is entry around this 137 level. Stop is going to be a break underneath this swing low. And what we can be looking for is this push back towards high of day. Now let's play it out. And you can see that price end up having a super solid push back towards high of day. And we end up having some more continuation as well. So you can see right here, this is the conservative entry model. This is when we wait for strong price action, which means buyers are stepping in off our key level in forms of hammer stick candles, any sort of bullish candles. Bullish candles means green candles around their key area. We can be looking for continuations back towards the upside. So what are the pros of the conservative entry model and waiting for strong price action? Number one, you wait for the buyers to step in. So instead of the limit order where you just buy in no matter what, in this case, what we can wait for is strong price action around this key level. So we can wait to see if the buyers want to step in off our previous resistance, turn into support key levels. Another pro, risking off that swing low. So instead of risking at that break of structure level, we can have a tighter risk and we can just risk off that swing low. And we know that if it breaks that swing low, we're most likely wrong instead of risking all the way at that key pivot low. Another one is that the risk reward is still good towards high of day. So even if you wait for conservative price action, a lot of the times the conservative is fairly similar to the limit order because in one candle, unless it's really bullish, is not going to push back towards high of day in one singular candle. Usually it's going to come back towards your key area, potentially have a few candles, and then you can wait for that strong price action for that continued push towards the upside. Another pro is you can get in majority of the time. You're not going to get in every single time like the limit order, but you're going to get in majority of the time. There's some circumstances where price, as I mentioned, just has one candle and it'll end up being back at high of day or at low of day. In those cases, those are just unfortunate, but majority of the times you can get in. One of the cons here that I have is not really a con. It's kind of in between the pros and the cons, but you have a medium win rate. So you have a medium win rate and a medium risk reward ratio. So, right, you have around a 50% win rate if you wait for conservative price action. Medium risk reward being anywhere around a 1-to-1 to a 1-to-2 risk reward ratio. Another con that we have, similar to the limit order, it's still prone to fake outs, not as much as the limit order, but it is still prone to fake outs because you're not waiting for confirmation. Similar thing, you still can take unnecessary losses some of the times. And another con that I do have is you're a little bit more discretionary. So sometimes if you want to be as mechanical as possible, you have a set rules in place. What happens if you wait for strong price action? This is where more discretion comes in. So if you are a beginner trader, discretion can be a little bit bad because you don't really know what you're doing. But if you're a little bit more experienced, you can use discretion to your advantage. So if you're experienced, discretion can be pro. If you're a beginner, discretion can be a con. So in this case, right, a little bit more discretionary can be a pro or a con, but whenever you do have more discretion when it does come to trading, usually leads to a little bit more of a con than a pro. So now let's go on to the final entry model that I'm going to talk about today. And the final entry model that I'm going to talk about today is my personal favorite, and it's waiting for confirmation, which is the most conservative. So once again, we have a nice kind of trend towards the upside. Now what we're going to be doing is waiting for the break and retest. So you can see right here, previous resistance turning into support. You can see that the buyers are also stepping in off this key area. So you can see the buyers step in. And what does confirmation mean? Confirmation means that this candle that we're at currently closes above its previous candle. So whenever you have a candle that closes above the previous candle, right, a body close above its previous candle, this is when we can look to take our entries with a stop just a break below. And in this case, we're always looking for a 1 to 2 towards the upside. So the confirmation model is my personal favorite because it does give you the highest risk reward ratio. And usually this indicates that price is most likely not only going to hit high of day, it's usually going to have continuation towards the upside as well. So how you enter in on this one is the close above its previous candle. You want to have a market buy order. Once we close above, our stop is going to be a break underneath the swing low, and we're going to be looking for a 1 to 2 towards the upside. So really that means for every $100 that we're risking, we're going to be looking for a minimum of $200 gain, right? A 1 to 2 risk to reward ratio. Now let's go into some examples that I have. So as you can see right here, most conservative, what I have is a nice break and retest, 5-minute opening range, 1-minute opening range as well. Now what we like to see is the retest off this key area for this continued push back towards the upside. And you can see right here, price comes back in towards our key area. You can see, right, we don't really have any kind of buyers stepping in off this key area. What we'll be doing is waiting for the confirmation candle in this case. So you can see right here, this candle closed above its previous candle. So that's when we can get in, right? Our entry, stop just a break underneath, and we're going to be looking for continuation towards the upside, right? We're going to be looking for a minimum of a 1 to 2. Once again, right, risk $1 and we're looking to gain $2. And you can see in this case, right, price ended up having a nice push towards the upside, right? It came back down once again, and then we end up pushing back towards the upside towards 475 on Tesla. Another example, as you can see right here, nice clean 1 touch, 2 touch. Now we're breaking above. What we want to see is the retest of this key area, which is your 423 for this continued push back towards the upside. You can see price taps in towards our key level fairly nicely. You can see that the hammer candles formed. Now we have the candle right here that closed above its previous candle. This is where we can get in, entry, stop, just a break underneath, and of course we're looking for a 1 to 2 towards the upside on this ticker. You can see once we have that confirmation, there's a good chance we end up gravitating towards high of day. We end up gravitating towards high of day and also our 1 to 2 as well. So you can see the confirmation is one of my personal favorites because it does offer you the highest win rate, and majority of the times we do have continuation as well. So let's take a look at some of the pros and cons. So what are some of the pros when it comes to waiting for confirmation and the most conservative? The pro is the highest win rate. When you wait for confirmation, you usually have around a 60 to 70% win rate towards high of day, right? It gives you that nice win rate, especially if you're going to hit that first target, which is high of day. Another pro is you're risking off that swing low. Instead of risking off this key swing low, what we're going to be doing is just risking right off this swing low. So we have super tight risk and we don't have to give it a lot of room. This one, when we do have confirmation, we like to see it push towards the upside right off the bat, right? We want to see this work right away. We don't want price to stall at our key level because we are waiting for that confirmation candle. And another pro, what we have here is the trade is the shortest time, right? Whenever we wait for that confirmation, we want to see price gravitate towards high of day as soon as possible. So towards high of day, this is going to be the shortest time in a trade. And then another pro is there's rarely any fake out. So when you do wait for that confirmation candle, as I mentioned, right, 60 to 70% of the time, it is going to gravitate towards that high of day key area. Some of the cons in this case, right, lowest risk reward towards high of day. So if you are a trader that likes to take off partials at high of day, it might be a little bit of a con because the risk reward ratio might not be the greatest towards high day. It might be a little bit under a 1 to 1. Sometimes you miss the trade. When you do wait for confirmation, sometimes you miss the trade because the risk reward might not be in your favor, right? When you wait for that confirmation candle, sometimes that candle is already at high of day. So you still can look for continuation higher, but majority of the times when you do want to wait for that confirmation candle, you want at least a 1 to 1 risk reward ratio towards high of day, and you want to see continuation above. Another con in this case is you're buying after a bullish candle. So when you're buying after a bullish candle, right, that usually indicates you're buying on the ask and you're not really getting the greatest fill price because now you're expecting price to gravitate towards the upside fairly quickly. And this also brings into my next point, which is getting filled on the ask. If you usually don't get the greatest fills, and if you do buy market orders on the way up, you might get a little bit of slippage, and it might not be the greatest risk reward ratio as I mentioned. So with this being said, let's now talk about when to be more aggressive, when to use the limit order, and when to use the confirmation. So the times to be aggressive, right? When should we be more aggressive in the market? Because me personally, I always wait for confirmation. That's what I personally use every single day. When I do use the limit orders, there has to be strict criteria. And some of the criteria that I look for is a clear higher time frame setup. When a clear higher time frame setup presents itself, we have some sort of opening drive play. When you expect price to gravitate towards a certain area fairly quickly, that's when we can be a little bit more aggressive. Another scenario is when there's an A plus conditions. So whenever there's A plus conditions, what we have is news, and we have also higher timeframes as well. So whenever these two are checked off in the pre-market, we can be looking to be a little bit more aggressive when it does come to market open. Another time when you do want to be a little bit more aggressive is you don't want to miss the trade. If you think it's an A plus scenario for you, you can be a little bit more aggressive when it comes to your entries. And then finally is when you're trading towards the downside. How price usually moves is we stair step towards the upside, and what we have when we move down is basically an elevator down. So whenever you do want to be more aggressive, a lot of times is you'll have immediate retest, you'll have quick moves that just happen right away towards the downside. So whenever you do want to have that limit order set up, the greatest time is to have it when you're trading towards the downside. Whereas compared to the upside, you'll have some nice retests, you'll have some nice confirmations, and you'll be able to have multiple entries towards the highs. Whereas the downside, maybe it'll offer you one good retest, and you have to be really aggressive because, as I mentioned, right, stair step up, elevator down, and when it does come crashing down, it really stays heavy and doesn't have any pops where you can short into. When not to use the aggressive entry. When not to use the aggressive entry is when you don't have any clear higher time frames. When there's no clear higher time frames, there's no reason to be aggressive. Trading inside the range as well. When we're trading inside the range, inside of previous day highs and lows, when there's no opening plays, right, there's no reason to be aggressive whatsoever, right? Wait for those confirmations, wait for extra confluences, and you want to be a lot more selective and patient in those market conditions. And then lastly, when there's no displacement. When there's no displacement, you really want to be waiting for confirmation, because when there is no displacement, right, that's usually when you'll have those retests where it'll end up faking you out and we'll just continue back towards the downside. So these are the scenarios when you should be more aggressive and when you should lay off the gas. Besides that, I use the conservative and most conservative entry model every single day. And now what I want to show you guys is some live trading examples of exactly how I use these entry models in real time. Let's get into it. Yeah, so you can see the Q's dropping and then Apple's holding out this one. So far, holding its 1 minute opening range. Now for Apple, would you like to see is you're going to risk off your 1 minute opening range, or you're going to wait for this break above your 5 minute opening range for continuations up towards 237? So right here, what you can see is Apple so far showing some relative strength coming to market open. You can see that the Qs are pushing towards the downside. Apple is pushing towards the upside. So you can see we have clear relative strength on this name. What I'd like to see now is your 5 minute opening range break. I talk about this setup plenty of times. What we'll be doing is marking out your 5 minute opening range high and your 5 minute opening range low. And what we'll be waiting for is the break above retest of this key area for this continued push back towards the upside. Now let's play out the tape a little bit more. As for Apple, you can see this one continue to show some strength. 5 minute plus this 1 minute order block 234. 12 is going to be the key level there to keep an eye on. So you can see Qs are still showing some relative weakness. Apple still showing some relative strength. The key level that I talked about now is going to be this 5 minute opening range in combination with this 1 minute order block as well. So I like to see this area be used as a retest for a continuation push back towards the upside. Yeah, keep an eye on Apple here. It's pulling back. Well, let's see the reaction that we have off this 1 minute order block in this 5 minute opening range as well. Keep an eye on Apple. You can be looking at the 237.50s or you can be looking at the 235s. So you can see right now I'm talking about looking at the 237.50 contracts on Apple. We're coming back down in towards this key retest level, as you can see here. Now what I'll be waiting for is the reaction off this key area. Based off of the relative strength compared to the Qs, right, we could be looking for an entry as soon as it taps this key level. But what I personally like to do, as I mentioned, is wait for conservative and most conservative, which is waiting for the buyers to step in off this key area, and then I can risk off this swing low for this continued push back towards the upside. So let's see how this plays out. So you can see right there on Apple, as the candle opened up, it was showing signs of weakness, but you can see how this candle closed, right? We put in that nice hammer candle right off for 5 minute opening range retest. You'll see, as I mentioned on this very next part, I entered in call positions basically on this candle close, and now I'm looking for this continued pushback towards the upside.
Yeah, I ended up taking some apples, the 237, just risk out that swing low.
So right there, you can see I just talked about Apple entering into the 237.50 calls, right? Once that candle closed, risk in this case just off the swing low. And now I'm looking for this continued pushback towards high of day and above.
Yeah, I'm gonna take 25 off at this high, but I like to see really with the Qs now, this next level, which is at 230, and that push above. Let's see if we can get that final extension, which is all the way up towards that 237.60. When did you and Tony enter trades? Yeah, I entered it right off that swing pivot low, right off here, 948. Once we had that confirmation, not the confirmation, sorry, once we had that strong hammer candle, risk just right underneath, and we're looking for continuation. Right, if you're gonna have a limit order, it's gonna be all the way down here, or if you're gonna buy in before, but if you wait for this candle, then it's just risk right underneath. Right, super tight, looking for highs, next level, and above.
So right there, you can see I just explained it to the group, right? If we're going to have a limit order, right, our risk is going to be all the way down towards this key pivot low, all the way towards the downside. In this case, what I did was wait for that strong price action, which was this hammer stick candle. My risk is going to be just to break below this 233, and I'm going to be looking for high of day and continuation towards the upside. You can see right there, that's exactly how I played it. Super, super solid trade towards the upside on Apple. I end up only taking 25% off as it hit highs and then scaled along the ways, end up pushing towards 237, and then end up actually moving higher as well towards that 238. So end up being a super, super solid trade on the day. And now let's go on to the next example that I have for us today. So right here, you can see this is a next example, fairly similar to the last example on Apple. You see that Google is showing some relative strength, nice push right off the bat, whereas the QQQ, I would say, was fairly neutral inside of its opening range. So you can see that Google is showing relative strength, where we're going to have marked out in this case 5 minute opening range. What we want to see is the retest of your 5 minute opening range for this continued push towards the upside above 205 and above. All right, so let's wait for Google. Let's see if the reaction off this kind of 1 minute order block plus this 5 minute opening range as well. This one's at all-time high, so this one you're gonna have to look at kind of fibs, key cycle levels as well, and just kind of bar by bar for Google since this one is at all-time highs. For Apple, this one continues to show weakness. All right, keep an eye on Google here. You'll be looking at, if you want to scalp it, you can look at this week's contracts. You can look at the 205s next week. They're a little bit more expensive, but if you want to hold this for kind of a longer term day trade, you can also be looking at next week's like the 210s. So you can see right here on Google, prices coming back down in towards our 5 minute opening range. In this case, you can see there's not too much displacement on this name. So what I'm going to be doing is waiting for the buyers to step in off this key area if we're going to be looking for this trade back towards the upside.
On Google, I like to see kind of the reaction around this 1 minute. I like to see this candle close. So far, it's in this 1 minute order block. Now I would have to basically close back above this 205 for me to be interested. Apple so far, just basically in a kind of a sell program, just staying heavy. This one's just going to end up gravitating back down towards your previous day highs in that gap fill that it has. Yeah, so for the Google, I ended up picking up some of this week. So I picked up a small amount of this week's contracts for the 205s, and then I picked up a couple of the 210s next week for the February 7th. On the 210s, and at least for the 0 days, I'm looking to scalp the 0 days, just kind of bar by bar. But then on the other ones, the 210s for next week, this one I'm going to leave more of like a higher time frame thesis.
So you can see right there, I mentioned I just got into some of the 205 this week's contracts, some of the 210s next week as well. But you can see, right, a couple lower wicks in towards this 1 minute order block. But as soon as it showed some strength as it was forming, right, I ended up entering in this position, which was your conservative entry as this candle was forming. In this case, my risk was just going to be a break underneath this 204, and I was going to be looking for a continuation towards the upside with the QQQ as well.
The plan for the 0 days are just to kind of scalp it, and then the other ones I want to hold for a little bit longer and kind of manage this one on the 5 minute. As for Google, so far still holding the 5 minute opening range. I want to see the reaction we have around this high day level, similar with the QQQ. If we're going to see some continuation on Google, at least for the 0 days, I'm going to look to take some off on the 0 days, but then hold and bar by bar the rest of the 0 days, and then the higher time frame ones, I'm just going to maintain and just hold. What I want to see here is the Qs, right? This 250, 228.70s. I want to see how this 5 minute candle closes, and then similar to the rest of the tickers as well. Since Google, I mean, there's no target, so I'm just going to kind of bar by bar on the higher time frames with the Qs as well.
But yeah, Qs ended up pushing towards that gap fill that I ended up talking about, which is your 529. Google ended up pulling back and moving later into the day, but ended up being a super solid scalp on those 0 days. So let's go on to the final example that I have for us today. So you can see right here coming into market open, this was a very recent trade that I ended up taking on NVIDIA, right? You can see Qs, nice push towards the upside, NVIDIA as well, nice push towards the upside on this ticker. We're now above our key area, which is our 1118. This is also your 5-minute opening range as well. Similar setup that we always look to trade, right? 5-minute opening range. Now we're going to be looking for the retest off your 5-minute opening range for continuation back towards the upside on this ticker.
Yeah, so keep an eye on NVIDIA here. So Q's a little bit of reaction off your previous day high. NVIDIA kind of similar thing, came up towards your previous day high. Now we'll see if this first pullback gets bought out, which is your 5-minute opening range on combination with this 1-minute order block as well.
So yeah, Q's ended up a little bit of reaction around this previous day high. NVIDIA is coming right back in towards our key level. So I talked about now. Let's wait for the reaction. Let's see if the buyers want to step in off this 5-minute opening range in combination with their 1-minute order block as well.
Yeah, I'll be looking at the 130s, sorry, the 120s on NVIDIA. All right, so far Q's getting bought up. NVIDIA showing some strength out this candle as well. See how this candle closes. I took off the 120s versus just that swing low, looking for a push with the Qs as well towards high and above. This one has room towards that gap fill.
So yeah, you can see right there, NVIDIA, we end up having that super strong hammer candle right around this 118 level, which was your 5-minute opening range in combination with your 1-minute order block as well. You can see this candle ended up closing above its previous candle. So as soon as price showed some strength, that's where I got in, stopped just to break underneath. And now I'm looking for this continued push back towards the upside on NVIDIA.
Yeah, that was the key area, 119.20, and the Qs is that gap fill. Yeah, with the Qs, we have room back towards this gap fill, and then Qs, NVIDIA is basically, this is your gap fill, and the NVIDIA is basically this. Previous day lows, you can see here, then over the weekend, 120. These are your key levels, scale, and then you can bar by bar, scale, scale.
So you can see right there on NVIDIA, nice hold of our 118. Super nice reaction right off our key levels. The buyers ended up stepping in. You can see all these lower wicks right here, right off our 118 key area. And now we're gravitating back towards the upside. Now what I wanted to see on NVIDIA was this nice continued push with the Qs as well. You can see as I fast forwarded it here, right, super nice push on NVIDIA right towards the upside, right? The exact same setups that I look for every single day, the 5-minute opening range. I also have other setups as well, but hopefully you guys did enjoy that video. If you did, learn something new about the different entry models. Make sure to backtest this yourself. As always, if you did enjoy that video, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.